On now.
And welcome back. If you do have savings and you're not looking so much for the high risk reward equity exposures, there's a defensive play in the bond market that's been so far outperforming its index-based alternative. Bond portfolios picked by the young company XTB, which stands for Exchange Traded Bonds, have outperformed bond indices by 175% so far. XTB co-founder and chief investment officer Ian Martin came in for a chat. Ian Martin, it's great to have you around the desk. Now, these exchange-traded bonds that you're involved in, we've seen this outperformance of bond indices by 175%. How has that happened?
So, XTBs give investors exposure to individual corporate bonds.
Right.
We have 50 on the stock exchange, and we needed to give people a choice and a way to invest. So we created portfolios for them to put together. And our portfolios have concentrated number of bonds, so between 5 and 8 XTBs.
Yes.
And the ability to pick higher yielding corporate bonds has allowed those bonds to outperform the composite index and the credit index.
So it's in the type of bonds you pick and the term?
It is indeed, yes. So we give them higher yielding corporate bonds. These are mainly investment grade bonds, household names like Qantas, Westfield, Illumina.
Yes.
And they're in the maturity of 3 to 5 years.
Yeah.
And so they don't have the exposure to interest rate movements that, for instance, the composite bond has, which has 30-year government bonds in it.
Mm. Why aren't more people in this space?
Well, we basically created the innovation for the Australian marketplace. And so we are the first to bring it to the Australian market.
So this is literally in the last couple of years, because you're only, what, since 2015?
2015, we've been on the stock exchange, exactly.
So people are just becoming aware of this. What are the risks involved in it? I mean, you always think of great returns. What about the risks?
Look, firstly, we talk about great returns, but this is a defensive asset class, and it's a defensive product.
Yes. It's a bond.
It's a bond.
Yeah.
You invest with Qantas to 2022, and these are the issues. You're now lending to a corporate, really, through the XTB, rather than to a bank which people are traditionally more familiar with.
Yep.
There is price movement, but every day you hold a corporate bond, an XTB, it gets less and less risky, less and less exposure, because it gets closer to maturity. You know the coupon, and you know the principal repayment date. So we're giving investors defined outcome investing.
At the moment, what are a lot of investors putting their savings into if they're going to get involved on the sort of debt side?
Traditionally, the self-managed super fund market has had exposure to bank deposits. There's about 26% exposure of the self-managed super fund market to bank deposits. And with the economic environment and change in regulations, deposit rates have been falling. And so we're seeing, for instance, the big 4 banks around 210 for 3-month deposit rates. Those aren't going up, I don't think. So people need alternatives now.
So this basket of bonds,
Yes.
how does it compare to, say, passive investment, which actually hasn't done that badly, and indeed ETFs?
Yes, correct. When you're an index tracking ETF, you're constrained by your index. And if you're constrained by the composite index, which is the most common index that we have here in Australia, it's nearly high 80% exposure to government and semi-government bonds. And not only that, but they're long-dated instruments. The government issued a 30-year bond last year, and that went into the index. So if you're tracking the index, you have to track out there. You have to track that, what we call duration.
Yes.
We just give our investors the choice to say, well, I'd like to invest in Qantas to 2022, or Illumina to 2019.
So this all sounds almost too good to be true, Ian. I mean, is there any downside? Is there any liquidity issues?
Because it's an ETF style, there is a market maker. In fact, there are 2 market makers on providing prices continuously on the ASX. And this is new, and investors are adjusting and learning about it, because they can now, through the stockbroker, see a price all day in the corporate bond, where traditionally they had to go to more OTC type of markets for pure fixed income.
But once you're in, you can trade.
You can trade.
They are
buy and sell
indeed exchange traded bonds. Yeah.
We really think that they're a good buy and hold. These are a defensive asset class, but there's liquidity all day for these.
Yeah. And will the market itself grow? Because, I mean, these are all short-term bonds, of course.
Yeah. We really believe that. We've grown to now over $230 million of XTBs issued.
Yes.
And we can see a continual increase in demand and education as people learn and become familiar with the product.
And from the issuer side, what's attractive about a sort of, would they actually issue 3 to 5 year bonds? And what's attractive about doing that? How's the pricing?
So the issuer issues into the wholesale market.
Yes.
And gets the wholesale pricing. And so that's attractive to the issuer. They have that wholesale price. We buy it from the wholesale market and make it available on the ASX.
Yeah, and then it's about collating.
And then
choosing your bonds.
And then it's about choosing your bonds. And we help with that with either bespoke portfolios or the portfolios that we have available on the website.
Yeah, and the business itself, your business, is it public, private? How is that?
It's a private firm that was started by bond experts and some ASX-based experts, and we're committed to really bringing fixed income to the Australian public.
And so, finally, Ian, I've talked about growth.
Yes.
How do you feel you are tracking to your own trajectory?
Look, we're very comfortable with the way we're going, and we see the investors coming in, and we're working with investors and giving them solutions. We've got different ways of delivering portfolios for the investors now, so we're very pleased with the growth.
Yeah, and if you want to get involved in one of these bonds or into one of these bonds, it's a matter of going to your broker.
Go to your broker. Yeah. Go online, go to your broker, go to your IFA.
Good. Ian Martin, thank you very much. I've learned a lot.
Thank you very much, Ticky.
And that's all for the show tonight. Tomorrow, Myer CEO Richard Umbers on his results. Thanks for your company.